Sports 18.
Welcome back. You're still tuned into Halftime Report on CNBC TV 18. And we also have Ekta, who's back with us on the show. Hey, Ekta. Not looking so bad for the markets, actually, today, as expected.
Yes, absolutely. Well, there's definitely a recovery that you can see on the screen. So the mid-cap index is up around 0.3%. And it's really the financials which are leading from the front. So the Bank Nifty is up around 0.4% at this point in time. The stocks such as Axis Bank, for example, and along with State Bank of India's SBI comes out with its numbers on Saturday. That stock holding with a gain of around 1%. But we have a lot of stocks to discuss within the broader markets, which are reacting to their Q2 numbers. Dalmia Bharat, in fact, is higher in trade on the back of good performance. Nigel is here to tell us more.
Well, Dalmia Bharat's numbers are more or less in line. And in line is not so bad because we've seen a couple of cement companies come out with a set of numbers that have missed estimates by a big margin. So the top line was in line, the EBITDA performance as well as the margins more or less in line. The tax number looked a little bit better because that was because of a tax credit that effectively pushed it up. Now, why does the street like these numbers and why are they positive on Dalmia Cement going ahead from here on? One is the second half of the year could see a recovery in profitability. The second factor is they're going to be moving from a capacity of around 35 million tons to around 49 million tons. So there's a big addition in 2 years itself. By FY24, they will be there. And also now they're almost a 50 million ton plant. When they were a smaller capacity, well, to give them around a single-digit multiple on an EV upon EBITDA basis was fair. But now the street could be believing that maybe a double-digit could be warranted. So these are the three big reasons that the stock, in fact, is doing a relative outperformance. In fact, the con call just concluded, and they've given us some takeaways out there. They're expecting to grow at around 1.5 times the industry. The second factor is they say that they are, constantly on the prowl with regard to inorganic growth if something worthwhile comes about. And they've also said that the second half of the year will be good, volumes will spike up, prices will move up, and input cost will cool off. Put all these factors together, Dalmia Bharat doing well in trade. Back to you.
All right, Nigel, thanks a lot for that. That's about Dalmia Bharat. But what's not doing well in trade is Voltas, under pressure after it posted a weak set of numbers. It is perhaps facing the heat from the brokerages right now. In fact, as we speak at the low point of trade, Vahishta joins in with the details on that. Vahishta.
Hi Mangalam, thanks for that. Well, Voltas declared the results in earlier part of this week and the numbers have not been very great. Well, though the revenues were up 5% on year-on-year basis, the weak point has been the margins, which came in at 5.8% versus 7.7% in the same quarter of last year. The estimates were at 6.6%. In terms of segmental revenues, the unitary cooling products division revenue saw marginal growth of 4%, which was also below the estimates. The segment was impacted by the lower consumer sentiments towards the discretionary spends in a generally lean quarter that this is. The room AC market share has also lowered to 22.8% in the 8 months of the ongoing calendar year versus 24.1% in the 6 months of the ongoing calendar year. The management has said that with high cost inventory position and a competitive environment that they are facing, it will be difficult to achieve a double-digit margin in the next 12 to 15 months. Also, the second negative point is that Daikin overtakes Lloyd to jump to the number 3 position in the RAC market. So there's a market share loss. The brokerages feel that rising competitive intensity and a margin pressure is expected to continue in the AC segment for Voltas, and there are a couple of downgrades from brokerages, which includes the likes of Macquarie, Kotak Institutional Equities, CLSA, BNP Paribas. All of these have the target prices in the range of 850 to 900, but there's also buy rating on the stock from Citi, Nomura and Jefferies, which is in the range of 1,000 to 1,200 rupees.
Okay, all right, Vaishta, thanks a lot for joining us and taking us through all those details. But one stock in the broader markets that's doing really well, up almost 10%, is Alembic Pharma. What is happening here? Good news coming in for the company.
Well, yes, definitely. So they've received an approval for an injectable. So this is the second drug or injectable that they've received approval for in just the past week from one particular facility. So the news is for today, they have received approval for a particular injection which is used to treat a severe to moderately acute pain in adults. The market size is not that big. It's around $60 million. But like I mentioned, it is the second approval from the General Sterile facility, which is F3, which was inspected in August of 2022. And it is the second injectable approval from the F3 facility just in the past couple of days. In fact, on the 1st of November, they received approval for an injection which is used for surgery and ulcers with a market size of around $40 million. Why is this important? Is because the F3 facility, in fact, was inspected from August 18 to 30th of August, and it was issued 2 observations. But before that, in November 2021, it was issued 10 observations by the US FDA. So the street was very skeptical on whether or not this particular facility is actually going to see US FDA approvals come through. And remember, injectables are always tougher drugs to get approvals for. Also, on the 2nd of November, they did receive approval for a colon drug, which is Pentasa generic. So that also is expected to be a good opportunity. And remember, the US sales have been struggling. In Q1, it was $48 million versus estimates of $50 to $55 million. The company is saying they expect the US markets to recover, and this should probably aid in the recovery for Alembic. That's the reason why you're seeing the stock up 8 to 9% And remember that the numbers come up on the 11th of November. So it's not any kind of earning expectations. It's the injectable approval that it's reacting to.
Okay, all right. So that's about Alembic Pharma. But from secondary market, let's go across to the primary market because the BKG Foods IPO is open for subscription today and will run till the 7th of November. Mangalam, give us more details about this bhujia maker.
Well, it is an 880 crore offer for sale. The company is seeking a post-issue market cap of close to around 7,500 crore rupees. But importantly, it's the third largest ethnic snacks company in India, the largest manufacturer of Bikaneri bhujia in India as well, the second largest manufacturer of papad, and the third largest player in organized sweets market. If that's not making you hungry already, let me tell you, bhujia accounts for 35% of their revenues, namkeen accounts for 39%, and sweets are about 7.5% We know the strength of the brand that the company has, 30 to 50% capacity utilization, giving them a headroom of doubling their revenues from here. But the risks are, one, strong competition from big local players, big domestic players, as well as MNCs themselves. Secondly, there is a GI patent for Bikaneri bhujia. So if you have to sell something known as Bikaneri bhujia, your plants have to be in Bikaner itself. So that limits the Bikaneri bhujia part of their business only to the Bikaner area. So if they have to sell that somewhere else, they'll have to open plants somewhere else with different names. So that is one limitation. The second one is that, an aggregate value of related party transactions is roughly 10% of their revenue. And thirdly, they have unsecured debt investments of around 117 crores in group companies. And finally, we'll watch out for raw material inflation, just as we have seen in a lot of the other food companies as well. Last year, they did revenues of 1,611 crores with 7% margins. And the previous quarter, the first quarter, they've done a profit of close to 15 crores. So if you assume that this goes to around 25 to 30 crores going forward, that gives you an annual profitability run rate of 100 to 120 odd crores. Even then, the company is offered at 58 to 60 times FY24 earnings. So not particularly cheap. So this is something we'll have to watch out for.
Okay, well, you know the irony, right? It's this IPO and then Medanta, which is open at the same time. It's Medanta, which is basically Global Hospitals, which has opened its IPO on the 2nd of November, which is open till, or rather it's open today. It's a large IPO, over 2,000 odd crores. And they have 5 hospitals, mostly in the north and the eastern part of the country. But ironic in that sense, but nonetheless, we'll take a short break. Up next, we'll be talking to our first corporate on the show, Kamlesh Gandhi, the chairman and MD at MAS Financial Services. We'll be discussing their Q2 performance. Stay tuned.